Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Peter Boockvar. He is the Chief Investment Officer with the Bleakley Financial Group. Welcome back, Peter.
Thanks for having me.
Yeah, always a pleasure having you on Wall Street Silver. So, Peter, Powell just raised rates again by 0.25 basis points, and now interest rates are a lot higher, and we're starting to see massive stress in the banking sector. Is this just the beginning for the banking crisis? What's your thoughts?
Is it just the beginning? Yeah, it's likely just the beginning. Where it goes from here is highly uncertain because we're not sure how the government might respond with respect to protecting depositors more explicitly, or other steps. So I think that the shareholders of a lot of these regional banks have to be pretty careful. I think broadly speaking, assuming that there's a wave of consolidation that is about to come our way, is which would essentially sort of contain the situation from the depositor standpoint, even though there'll be more shareholders and bondholders that get hurt. But there's a whole credit consequence, of course, to what is going on. And I think that's what we're really on the cusp of here.
So what are you watching out for? Like obviously we've seen the bond market blow up in the past year or two. What are you watching for next as Powell continues to raise rates, or maybe he holds here?
I think he made a huge mistake in raising interest rates.
Really?
Um, I mean, I think just from a risk management standpoint, first of all, they raised in March after SVB. So we've had 50 basis points of rate increases since that bank collapse.
Hmm.
The credit contraction that is upon us, some people estimate it could be the equivalent of 25 to 75 basis points of tightening. So if you combine the two, we've essentially had 100 basis points of tightening just in the last 2 months
Wow.
after the bank failure. So we have to assume that not just the cost of credit has got more expensive, the access to it has, and there are a lot of parts of the economy, those that have debt coming due, particularly in commercial real estate, where they're going to have to come up with a lot more equity um, to prevent any default or upside down situation.
Absolutely. How does all these banking crisis affect gold and silver? Are people seeing this massive uncertainty and finding safety in gold? That's why it's going higher. What do you think is happening?
Well, I think as we're recording this, if I'm not mistaken, gold's basically at a record high.
Right.
So that sort of speaks for itself. Silver, of course, is still lagging down about half of its high, but I expect that to play catch up. And I think it's a combination of the belief the Fed is probably done, even though they should have been done before the March hike, but they're likely done. The bond market's in fact pricing in the beginning of rate cuts come September, and you get an economic downturn, and you get potentially easing, you get a weaker dollar, you get lower, at least short-term interest rates, and it's going to lead to higher gold and silver prices.
Absolutely. And central banks now, Peter, they're buying more gold now than they have in the past 55 years. Are they preparing for something huge, possibly de-dollarization?
I think that they've been diversifying their reserve base for the last couple of years.
Right.
Certainly was exaggerated by the Russian invasion and the confiscation of some of their assets. Uh, so I don't necessarily think that they're preparing for an event, but they're preparing for the process of over time the need to diversify their reserves and the reality that on a transaction basis that where the US is used 85+% of the time for global transactions, that over time, that ratio will slip.
Hmm. Last time you were on Wall Street Silver, which is about a month ago or so, you said there's maybe one more Fed rate hike and that could be it. So you nailed it spot on. You also said keeping these rates at these high levels could seriously break things. Can you explain what you think will break first?
Well, we've already seen that things break,
Right.
obviously with most recently the banks, but their breakage is happening every day that you don't see in the newspaper or on TV, and that is a small business that has a loan coming due this year,
Mm.
uh, or a small business that has floating rate debt that keeps resetting higher, or it's a commercial real estate owner that has debt coming due this year that they need to refinance. Some of those things don't in isolation make it in headline news, but in the aggregate, it's happening every day, every month, every quarter.
Hmm.
Because when you go 15 years of basically zero rates and then you go vertical in 1 year, that's a rate shock to anybody that has debt coming due.
Yeah.
And it is what I keep referring to as a death by a thousand cuts type economic situation we have right now, uh, in this higher rate refinancing world we're in right now.
Because everything, as mortgages come due in 2023, it's going to be bad. In my opinion, I think the recession will be huge. And I read an article recently, Peter, that it said they're thinking about a $1 trillion platinum coin that would save the U.S. from economic catastrophe. Why can't they just rationally discuss budget cuts to get things under control instead of just putting out a platinum $1 trillion coin?
Yeah, that idea is as brilliant as QE was. Um,
Uh,
I mean, governments don't respond to a problem until it turns into a crisis,
mhm.
and this time will be no different.
Yeah. A lot of people are comparing now to 2008. Was it just Lehman alone back in 2008, or was it a buildup of many factors, and or is this nothing compared to 2008 and completely different?
Well, 2008, a lot of the bad debt was, and I specify bad debt from a credit standpoint, was isolated in the big banks. The small medium-sized regional banks in '08, made it through pretty well because they weren't loaded up on, exotic, crappy mortgage-backed securities. Now it's the reverse, where in two ways, the reverse in that, at least right now, it's more of a duration problem than a credit problem.
Hmm.
Will become a credit problem because we're now on the cusp of a credit cycle that's turning against us. So it's going to be both duration and credit. And then, of course, this is more isolated to the smaller banks, where the bigger banks are just fine. So that's the distinction. I think in terms of the economic consequences, it still may end up being somewhat similar in terms of we're going to go into recession, and we'll see the extent and length and depthiness of it.
And now we're seeing gold at new all-time highs. Where do you think that can go? A lot of people I've had on recently on Wall Street Silver, they're saying gold by the end of the year is hitting 2,800, 3,000. Where do you think gold will hit by the end of 2023 if things continue as we see them?
I don't know. I can just throw a dart and tell
Yeah,
you. I'm just confident that it's going to go higher, and,
yeah,
and we'll
interesting.
have to see. I mean, they're trying to value gold is obviously more art than science. You can try to value it based on the level of central bank reserves, uh, currency in circulation. There's
Right.
certain ways of doing that. You can inflation adjust it from the below peak in 1980. That would take you to about 2,750 to 3,000 if you did that. So it's not crazy talk to think that gold can go to 3,000 plus.
Hmm. Last time I had you on, you said we're going to enter a higher inflationary period for longer and higher interest rate regime for longer. But why are there still so many people who think that we're just going right back to that 1 or 2% inflation rate and everything will be fine? Do we just need to get used to what we're in right now?
Well, inflation is definitely going to be falling as the year progresses, and maybe by year end it gets to 2%.
Really?
But that's not a victory because inflation was going to fall just on tough comparisons, let alone, yeah, we are seeing some price pressures, but it's so you go up in inflation, you come down. And it's where you settle out at is what's the most important thing. Now, we're not going to really know until 2024. So my argument is, yeah, inflation's falling. It's going to be well below where it was last year, but it's still going to settle out at, on a sustainable basis, above the 1 to 2% trend, more something like 3 to 4.
Hmm.
I don't understand people that say, oh, yeah, we're just going to go back to 1 to 2 and stay there. Temporarily, maybe we get there, but I don't think we stay there. So I think the world's changed, and there's a multitude of reasons for that. So um, that's why I think we're going to still be in a more stickier inflation. And even if we go to 3 to 4, It's much better than it's been and where it is currently, but that means that structurally interest rates are going to remain higher for longer as well. And the Fed will be, less able and less flexible to, slash rates when we get to, the recession.
Absolutely. And Peter, there's also a program coming out on from the Federal Reserve this July. It's called Fed Now. It isn't being promoted as a central bank digital currency, but it sure seems to be one. Why are so many countries around the world introducing the language for a central bank digital currency to be rolled out?
I mean, I think they're thinking that they're being technologically sophisticated and advanced with this. I can understand why China's doing it because it's part of their surveillance state.
Right.
I push back against people in the U.S. I know you're based in Canada, but I'm assuming it's going to be the similar theory that, if there's one thing that, both sides of the political parties can agree on, and it's privacy.
Right.
And I don't think people are going to want the government monitoring all their transactions via a digital currency. So I'm not so convinced that it's going to happen so soon, notwithstanding their desire to start planning for something like it.
Right. So I think the same thing. The one massive issue that would prevent the central bank digital currency is just privacy on both sides. But Peter, we want to thank you so much for coming down to Wall Street Silver, and hopefully as the market develops, we can have you on.
That'd be great. Thanks for having me.
Awesome. Talk to you soon.